Folks, if you are on YouTube, this young man probably needs no introduction, but we will give him one nonetheless. He is the one and only and great Jeb Smith. How you doing, sir?
I'm doing well. Merry Christmas, Happy Holidays, Happy New Year, all that good stuff.
Absolutely,
Thanks for
absolutely,
having me.
absolutely, Jeff. So you're on the cusp of 100,000 subscribers. I saw the other day knocking on the door. How many are we away as of this morning?
We're about 5,000, just short of 5,000. It's been a journey, 4-year
Yeah.
journey, but we're getting close. First quarter of 2024.
Folks, well, do me a favor. If you are yet to subscribe to Jeb Smith, why don't you be one of those last 5,000? Get them over 100,000 in January. Forget this
That'd be
Q1
awesome.
stuff. Let's get them there in January. Get them that silver play button. He's providing a lot of value in real estate, Southern California, financial education, all of that good stuff. So somebody I follow and someone you won't be disappointed about. So I look forward to that happening for you in January. Congrats.
I appreciate it. Thanks, Mike.
Well, we'd be remiss if we didn't talk about real estate. Why don't
Yep.
we start by looking back at 2023? Jeb, when you look at 2023 and, we're, 4 or 5 days away from it being over and in the books, what are a couple of things that surprised you, good or bad? Anything jump out at you?
I think the first thing more so than anything else is rates. Rates hitting the level that they hit. The 10-year hitting, peaking over 5% was a surprise to me. I didn't think we'd hit that high. In turn, rates going higher than I expected them to go on numerous occasions. I've been called out for my misses on rates, and that's okay, because that meant the economy did better than I thought it was going to do. And I think that's probably something else that I thought would happen in 2023. I thought we would definitely see signs of recession, signs more slowing in the economy and the jobs market, which would have led the Fed to kind of pause a little bit sooner than they actually did. So if we're talking three things, I think those are probably the top three. Everything that kind of goes around that, I mean, I saw a slower housing market for sure. But I think the rates were the big surprise.
Yeah. It's funny. We're at the end of Q4 now. Rates are now, let's call it 6.5 for nice round numbers. They peaked over 8. When I look back at 2023, and a lot of people in my circle were flippers or are flippers, and a lot of them suffered in Q1. I
Okay.
don't know if you saw that in SoCal, but a lot of my guys were talking 6-figure losses because, again, to be a flipper who exits in Q1, you were buying, I don't know, late Q3, early Q4, and the market was dead as a doornail November, December, and January. It did revitalize in February, which we could talk about. But yeah, I was shocked. I'm actually shocked at how different Q4 feels versus Q1. Q1 was not a good start.
No, I agree. It's funny. The Southern California market, as far as the flipping world, remains pretty strong. In the sense that, I had a property it's a flip opportunity I put on the market maybe 4 months ago, 5 months ago. Ended up not selling just because the client wanted to wait because she didn't want to sell her property with the contingency of buying something else. Although we had enough interest in allowing her to do that. There were flippers out there allowing her to stay as long as she needed to find that property. She didn't want to deal with that. Therefore, we pulled it off the market. We're going to end up coming back to the market, but we're talking $1 million flip is kind of the number that we were looking for. My client was looking for, and this is $1,250,000 on the high side sell, and you're talking 100 plus 125, probably 150 in the remodel. So not a huge spread in there by any means.
I'm not seeing any spread, man. That's skinny.
But the number of people, the number of offers, and these aren't just people that put in offers and say, I'm going to retract my offer and change and I'm going to try to change the terms as we get into it. Right. These are people that I know, a good portion of them. So these are the people I reach out to first. And all of them banging. I mean, they're still calling me today. Hey, is this thing coming on? So it's wild to see the number of people out there. And these are people that aren't just new to the game. They're not trying the quick buck. These are guys that do 15, 20, 50 flips a year. So these guys are seasoned. They have an idea of what they're doing. They have their own crews. So less of a concern on their side, but there's still interest out there for sure.
Yeah. The other thing that kind of, I feel good about calling in 2023 was what I call the bifurcated market.
Mhm.
What that is, if for folks that may not be familiar, is wherever you are in your housing market, there's a median home price. If you're exiting, but median and below, not a lot of supply. If it's in any kind of good condition, probably multiple offers, all of that. But the farther you get away from the median, you go 2x, 3x, shoot 4x the median. That market is really, really slow in a lot of the country. But again, I don't know Southern California. What did you see in 2023?
I think very similar to what you're saying there. What most people are surprised by though is that our median home price, right? So here in
Yeah,
Orange County, our median's like 1.2,
right,
right? So
exactly.
you start looking at that price. So people are saying, hey, it's $1 million purchase. There's multiple offers. It's selling above the asking price. Okay, that's reasonable based on where the median is. Just like you
Right.
said, the 700, 800,000 single family residents here in Orange County doesn't really exist anymore.
Doesn't exist. Yeah.
It's crazy. I mean,
Yeah.
even the areas like Anaheim and some of these areas that are people know it for Disneyland and they think, hey, that's probably a really desirable area. Yeah, there are pockets of it that are. But for the most part, it's where you would see more below the median home sales.
Hmm.
Now, I mean, you're talking 900,000, 850, 900,
Wow.
close to a million for some of these properties. It's just, and I think that's going to be the story for 2024 as we talk about it is
Mhm.
affordability.
Right, absolutely. The other thing I think we saw, at least in California, the state, I don't know about Southern California, is a lot of 2020, 2021, maybe even early 2022. We did have a lot of people exit, right? They got tired of what was going on in California. They had a bunch, they had their millionaires and their 1950 two-bedroom, one-bath shack, and they left the state. A, did that really continue in 2023? And B, have you seen anybody boomerang back? Right? They tried Texas or Florida and they're coming back to Cali. So two different questions, right? Did it
Yeah.
continue in 23 and boomerang?
You always have a portion of it. I would say, like what I always tell people, prior to the pandemic, I would have 2 to 3 buyers a year that would move out of state, right? They're sick of
Okay.
the politics, sick
Yeah.
of whatever, right? Just the
Right.
taxes, everything that California is known for, on the bad side.
Hmm.
And so always 2 to 3. I would say during the pandemic, that number probably doubled, right? So it went to
Okay.
5 to 6. And I don't do a ton of transactions. I'm a single agent. I do 25, 30 transactions a year. So not a
Okay.
huge amount, but 20, 15, 20% of
Yeah.
my business got up to people moving out of state. I
Okay.
would say the number of transactions in 2023 was way less. So I just saw less of people moving out of the state
Okay.
in general, just because of less volume overall. So I think there'll always be those people that are looking to move, looking to do something different, just not happy, thinking the grass is greener.
Hmm.
So there's always going to be those people. But as far
Sure.
as the boomerang thing goes, not really so much in 2024, but over the years, I have had clients leave,
Hmm.
go to states like Texas. I had a buddy, in fact, he rents now here locally, that he went to Austin,
Okay.
bought a model home. The number at the top
The
of the hill,
one. Yep. Yep.
the one, lived there for 6 months and ended up renting it out. He's now sold it, but ended up renting it out, moving back. He was like, I couldn't do the weather.
Just
The weather
just couldn't do it.
sucked. Like
Yeah.
everything else I was okay with, but the weather was awful. So I have had those people over the years, but it's a small people. I think once people make that decision to leave, it's hard to make that decision to come back. Plus, it's once you sell in California,
Oh yeah.
very difficult to wrap your mind around. I just bought a $600,000 home in Austin that was like the house, and now I got go back to California, and for that same house, I got to spend
Yeah.
$1.5 million or two.
Yeah.
It's
Yeah.
hard to do. Yeah.
Yeah. The other thing that you mentioned there that I was happy to get right this year is I called the bottom in transactions. I called 3.8, obviously bottom at 3.79. I'll call that a win. Um, there's a lot of real estate agents that aren't single. They're big teams. They got lots of overhead. We're seeing a lot of people kind of leave the business, probably more to come. Same in mortgage. Um, I don't really see transactions going up a lot. I think maybe 4.1, 4.2, probably for the next couple of years, right? Because we have all these people locked into low rates. Do you kind of see it the same way, or,
Yeah,
or
yeah, I
do you see
actually
it
do.
different?
I say it's hard. Picking the number of transactions is very difficult. With any accuracy. Just, I mean, the fact that you got 3/8 is really good. I mean, I just don't follow transactions enough to say, hey, this is where I think the number is going to be. But with that said, I could see the number increasing by 10%, right? Which
Right.
would get us to 4.2-ish.
Yeah.
But there are people out there calling for 20-25% increase in the number of transactions. And that's very difficult for me to see without seeing a big change in rates and inventory. Because and I do think rates are going to improve, and we'll talk about that. But
Mhm.
I don't know that they're going to improve enough to get enough
Yeah.
people making that shift in movement. And yeah, so and with that, I mean, to kind of go along with what you said, I think the big teams, the people, the guys and gals that do a ton of marketing out there to farm, and those
Mhm.
guys are going to suffer. The guys that have 20-30 people teams that have to feed those guys, that's going to be a very costly business over the
Yeah.
next couple of years, just because
I
I
totally
think the
agree.
transactions are going to be down.
Yeah. I do say, like, it's really funny if I had a person reach out to me the other day and said, "Should I get my real estate license?" And I said, basically the same answer all the time. I don't Is it your passion? Blah, 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 blah. But
Yep.
I did go a step further and say, if you get your license now and you could build your process, your team through the next 3 or 4 years, you're on the other side of this, you're gonna be a legend
No,
because
for
this
sure.
will be the worst market of your career the next 3 to
Agreed.
4 years, right?
Yeah,
So,
yeah, yeah. I believe that. I think if you can, the successful agents like this last year, I did a third the volume that I normally do. Part of that was me having focus and interest in other places and not really focusing on the real estate side of things so much. Part of it was just being burnt out over the last couple of years to some extent, and part of it was
right.
just the number of transactions wasn't there. And but it's like I've been through the cycle of 06, 07,
Yeah.
and coming through, there were some in the teens where the number of transactions fluctuates a little bit. But if you can be in the business and be successful now, this year, next year, going forward, you're going to do really well.
I couldn't agree
When the
more.
business comes back.
Yeah, and it will come back. It always does. The bottom is gonna be, longer than we like, but, if you can survive, get to the other side, I would much rather be a new agent now in 2024 than a new agent in 2021
Oh,
because
absolutely. Because those
you would have
people
learned
are jaded,
bad
man. They
bad habits and bad expenses and all that stuff,
Yeah,
so
and those people got in, and it was like, everybody wanted to buy, and you were just handed business. And now it's like you gotta work for it a little bit. And the buyer that knows you're an agent also knows 3 or 4 other agents. So it's like that's going to be
Yeah,
the difference going forward, is that you're going to have to set yourself apart a little bit in order to
yeah,
kind of capture some of this business out there.
totally agree. Well, one more kind of talk, and then we'll get into our thoughts about 2024 is there is interest rate lock-in, right? Lots of people have rates in the 2s, the 3s, the 4s. Do you have an idea, opinion, a guess, a shot in the dark at how low rates have to go to really reignite what I call the move-up buyer, right? The person's gonna sell their first entry home to move up. Today, the math just doesn't work. Oh, it's 200 grand more and the rates doubled, hence my payments tripled. People just aren't making that move. So you ever thought about what rate may reignite the move-up buyer?
A little story too about myself. So I actually had a 3% interest rate.
Okay.
I just bought a property 2 months ago.
Hmm.
Move up property, and
Okay.
got a 7% rate.
Oh,
And so the funny thing is, I'm actually in the process right now of refinancing to a
yeah.
6.5% rate. So it should close any day now.
There you go.
But why? Why did I do that? I'm
Yeah.
in the business. I know real estate. I know, that payment, my payment almost 2x, 2.3, 4 times
Yeah.
what it was.
Okay.
Why? I've got
Yeah.
3 boys, 11, 9, and 5. They're
Ooh.
growing. I need more space. I
Yeah.
need, it's a property I've been eyeing for 10 years. My buddy owned it. I've been trying to buy it for that period of time. He finally called me and said, hey, I'm ready to sell
I'm
it. I
ready.
wasn't
Yeah.
really ready to buy it,
Yeah.
but I knew it was an opportunity for me long term.
Okay.
So I decided to bite and do it. It is what it is. I'm going to hold it forever. So I don't really care so
Mm.
much, but I think there's a lot of people in my position that need to move up for one reason or another. I think
Mhm.
there's also a lot of people that bought during 2020, maybe even prior to 2020, and just didn't buy the right house. They didn't buy the 7, 10, 12-year house. They bought the house that they needed right then, and life has changed since then.
Sure.
They've had kids, they've had, whatever, just a shift, and they weren't in the school district that they really wanted to be in, or whatever. So there's people that truly don't like where they live, that
Sure.
with the right opportunity will make a move. Now, what's the rate? I think it's closer to 5%.
Okay.
I think the lower it goes, the more it unlocks it.
Agreed.
But I think, I had a 3%. I look at, I've obviously calculated payments on a lot of different rates just to see where things were. And I would have been comfortable at that payment at 5%,
Yeah.
probably no brainer. I'm comfortable with the payment now. I don't like it, but
Yeah.
I wouldn't have done it had it not been comfortable. So I think the closer you kind of get to that number, it will help things.
Yeah.
Yeah,
Yeah.
it's hard to
I
say,
think you're right.
really hard to
So
say.
first off, I don't know a lot of people that would have signed up for, 230% more. If there are out there, there are just family situations, merging a family. It happens. It won't be a mass. It's not a lot of people. But I got to tell you, I agree with you. You go get a 499 30-year mortgage, that pretty much unlocks a wave of demand. Um, certainly
There's
four and a
people
half.
waiting.
There are people waiting. And
Yeah.
I think it's lots of people. And the beauty of this situation is, to me, it's a clogged pipe. I don't know if a better analogy, I'm sure there are one, but the longer this goes, like if we go through 2024 and rates are 6.5, then we get into 2025 and they're 5.99. The longer time goes, the more people will unlock, because you're right. They
Absolutely.
have kids, right? There's one thing when the third kid's in a crib. 3 or 4 years from now, that kid's going to be walking, and suddenly the crib in the parents' bedroom is not an option, right? So it's going to be a timing versus rate kind of, how uncomfortable do you want to be?
And that's the thing, is I'm comfortable to being uncomfortable to a certain extent, but it's like, it just, for me, it was the right opportunity at the right time. Had I not done it, and I bought it off market, so, and I
Yeah.
got, I would say, a quote unquote deal on it.
Deal. Yeah.
But if I wouldn't have bought it, somebody else would have, for sure.
Yeah.
I mean, in
Yeah.
my neighborhood, homes are selling right and left. It's just, it is what it
Yeah.
is. So,
Okay.
yeah, but yeah, so.
Well, let's talk about what happened. Again, we talked about rates earlier. Both you and I were wrong. I've admitted that on my channel. I did not see rates going to 8%. I thought they'd be in the mid sixes all year, which clearly didn't happen. Does look like we're ending the year in the mid sixes. I am curious. Something I said about 2 weeks ago is I was afraid that the spring selling season started, which would be wild for the spring selling season to start in December. So did you see any more demand kind of pop off when rates got sub 7?
Not really.
Okay.
Again, it's that cyclical. I'm
Mhm.
I'm in kind of vacation mode. I had some family things happen, so I was kind of not really returning calls for a while. Like I kind of
Okay.
pulled myself out of the situation a little bit. So some of that might have turned transactions, that I missed an opportunity on for, um,
Okay.
but overall, I would say that there's definitely interest. Has it converted to demand? Not for me yet, but I think
Okay.
there's an opportunity there for sure.
So as we wrap up 2024 in Southern California, the markets that you focus on the most, how does it feel as we're exiting 23 versus when we started? Is there a noticeable difference?
Yeah, I think the start of the year was kind of an unknown. Unknown where the Fed was going, unknown where rates were going, what was going to happen with inventory with rising rates, right? Because we saw rising rates in
Mhm.
Q4 of 2022, or Q3,
Yeah.
Q4, and then it kind of pulled back. So the question was that going to continue, or were we heading? Was that the peak and we were heading down? I think
Yeah.
now we have a little bit more certainty in at least where the economy is going, and in turn where the Fed is likely headed. So I think, for me, I see real estate as a whole being better transactionally in 2024 than 2023. So for me, that's a better picture,
Mhm.
right? I mean, you kind of have an idea of, okay, this is what I normally do in a a market. If it's better than this year, then I kind of have an idea of where I'm going to be. So for me, I think that's better. But outside of that, I think there's still some uncertainty out there in the idea that things could get worse quicker, and in turn send rates lower, which we'll talk about, I think, as we probably talk about rates a little bit.
Yeah. Well, let's just pivot there, right? We've exited
Yeah.
2023. We're heading into 2024. When does the spring selling season traditionally kick off in Southern California? Is it like Super Bowl,
Yeah.
January? Is it?
Yeah, so second week of February, which is typically around Super Bowl Sunday. That's kind of what people kind of like, the date, if you will, starts to pick up. Now,
Okay.
inventory as the new year starts, it starts to trickle to the market, but you don't really see that noticeable difference until February. Last year, we didn't really see it. Like we saw the peak in inventory pretty close to the beginning of the year, for
January
a lot of markets.
8th.
Yeah, and then it just declined, and then it started to pick up as rates went higher. But I would say, mid-February, and then it runs in through early June, and then that's kind of when we start to see the slowdown in sometime in June, July, and kind of tails off towards the end of the year.
Yeah. And what about kind of the median home price? Are we kind of back to the peak of what I guess would be kind of June of 22? Are we above that? Are we at all-time highs? Do you have any thoughts on where we are as we?
I think I think we're pretty close to it. It depends on who you look at for measuring, median home price and all of that. But we definitely haven't crashed, right? Which what a lot of people thought we had was going to happen, and prices have remained pretty steady. What people didn't foresee is rates going to 8% and home prices not really moving very much, kind of stabilizing across the board. And I think that was a big surprise for a lot of people. And it's something that we've been talking about for the better part of 2 to 3 years on YouTube. It's like, you need supply to change the dynamic. And until you get that increase, you're not going to see a noticeable difference in house prices. And I think that it kind of, we actually nailed that one to some extent. And that's exactly what we've seen. So it'll be interesting. I mean, I think home prices can continue to go up. I think 2024 probably offers another 3 to 5%, which is crazy to me to think that we could still be increasing after what we've seen over the last couple of years. But I think affordability is a problem. California, we're at 15% or so when rates were at 8%. So we've increased now. I think we've probably gained some of that affordability back. We might be at 17 or 18% or something now that rates are at 6.5. But you just have less able buyers, right? You got a lot of people that want to do something, less able people willing to do it. But we've already seen, in markets when rates suck, crashes happen back in 708, whatever year you want to use for that. The bottom in transactions is somewhere around 4 million, right? In any given year. So you already know that you're going to have about 4 million transactions kind of on the buy side in any given year. So I think you can only increase so much without seeing a noticeable improvement in rates.
Yeah, there is one thing that does seem to be coming to some California markets down in Southern California. I don't know if you've seen this. There was a house in Joshua Tree that retraded, right? It was bought for like 600 or something, and was a tricked out Airbnb. That person lost their ass. I think they sold it for like 380, roughly a 40% drop. There's a lot of SoCal markets that got very Airbnb heavy because it was a can't miss, riskless opportunity, which turned out to bite a lot of people.
The Joshua Tree thing, I don't understand it.
It's a desert, man.
I mean, not only is it a desert, it is the middle of I mean, like, there are houses out there, like, there's nothing around for a mile. I mean, and some people want that. But to think that you're going to go and flip a property and Airbnb it, I mean, there's so many Airbnbs out there. I think that's the entire market outside of the people that live there full time. Every other house is an Airbnb. And I'm not surprised to hear stories like that, because that to me is not a desirable area. I mean, I'm getting a lot of hate comments for that probably, but is it fun to go spend 2 days? Sure. But you do it once, you don't need to ever do it again. I mean, it's one of those things.
Check the box.
It's done. So
So I think there's some supply coming there. I think there's a lot of people so I've been doing this a long time, as have you. real estate goes through these cycles where these can't miss opportunities. And yeah, the first people in do okay because they get out, but then they attract all of these folks who are financial engineers and not operators, and they buy 600K houses when they should be 300. And then they lose their ass and, they never come back. So yeah, the Joshua Tree thing is and it's not over. There'll be some more Airbnb pain, I'm guessing, because you don't need 100 Airbnbs in Joshua Tree or whatever the
Well, it's
number
not
is.
even 100. There's probably, I mean, there's probably more than that. It's probably
Yeah.
triple that. It's
Oh my gosh.
it's wild. Like, again, I drove through there for the first time this past year, and I was like, "What? I don't get the appeal."
I
Like,
don't get
I
it.
like to hike. I
Yeah.
like to be outdoors, but I can do that a lot of
One time.
places.
One
Yeah,
time.
yeah. One time, I'm good.
There you go. Well, let's talk about rates in 2024. I think that is the big question. Let's call it, well, into the year at 6.5, just for a round number. Um, any thoughts on where rates might go through the full year? Your crystal ball is as broken as
I
mine.
think, I mean, again, I think if the data continues to do what it's doing right now, nothing crazy, but we see the economy continue to slow a little bit, employment remains, stable. It's probably going to get worse, but like it doesn't get dramatically worse. I think you could see rates in the mid fives. I think 5.5 is a reasonable number for a rate just based on where we are now, because I think some of the spreads are going to improve as
Agreed.
you see some stabilization in the market. So that's going to allow rates just to kind of come down naturally. And I think the 10-year is going to continue to kind of come down, which again, not using the 10-year as mortgage rates follow it, but they do tend to be the leash that keeps the dog pretty close to it. So with that, I think 5.5. I think if the economy gets way worse, in the sense that inflation just bottoms out, which I do think you could see 2% inflation by April, just based
Yeah,
on
could
how
happen.
things are calculated. If inflation were to get lower than that 2%, the Fed's not, the Fed starts to get aggressive on rate cuts, and you see a spike in unemployment, I think you could see rates go lower than that. So how low? I mean, I don't think you see the 4% rate again, but I think high fours, low fives isn't crazy,
Yeah.
just based on where I think data is kind of moving us to. But it could take us a year to see some of this data, just like it did this past year.
Yeah, I do. I'll say it this way. I hope that the 2 and 3% 30-year fixed rate mortgage is behind us. Right?
Yeah.
I hope we don't go to zero rates and the government's buying 60% of all mortgages. That
The
was
economy would have to be awful, right, for that to happen again.
awful,
Yeah.
awful, yeah, awful.
So
Yeah, I like that. I think you brought up an interesting one that we've talked a lot about on this channel is the spread, right? Historically speaking, the average is about 180 basis points. We've been over 300 forever. We're currently at about 270 to 275. So even without Fed rate cuts, you have, 75 basis points where that could come in that could get us, sub 6. So, you add on top of that somewhere between 3 and 6 rate cuts. I think 5.5 is a safe guess for the year. So I think that makes sense to me.
yeah, and it's gonna be hard. I mean, like, right, this is a guessing game, right? I
Yeah, of
mean,
course.
we had Matt Graham on the podcast recently, and Matt, came on CNBC 2 weeks ago and says basically you could see high fours. And he's a smart dude. He's way smarter than I am when it comes to any of this stuff. And to hear that out of and hear it confidently, it
Mhm.
tells you that, hey, listen, there's a high likelihood that you see a big improvement in rate, right?
Mhm.
But that's not an opportunity to go out and buy a house that you can't afford at a rate now because you think rates are going down. I mean,
Yeah.
that's where something I want to be very clear on. It's like,
Yeah.
if you're not comfortable now, don't buy. Like,
Yeah.
buy when the rate is the rate that you're comfortable with, and then hope that
Right.
it goes down from there.
Yeah. I love the fact that a lot of people don't realize the 30-year mortgage is a true gift and an anchor, right?
Oh,
It's a
absolutely.
one-way bet, right? You lock in, and if it gets worse, you don't care. And if it gets better, refi, right? It's kind of
Absolutely.
it's a one-way bet. So I love that. So what about the economy? One thing that I got wrong in 2023 is I thought we'd have a, short and shallow recession. Didn't happen. Shoot, we grew at 4.9% in Q3, which is a wild number for the US economy.
Yeah.
Are you on the camp of, a soft landing looks possible, or do you see kind of a short and
Uh,
shallow recession?
I was thinking harder landing for the better part of 2023. Just a lot of the reports I follow seem to be pessimistic to a large extent. And I'm trying to separate myself from that. I'm not a pessimistic person by nature, but I'm like, hey, listen, all of these things are pointing to, a harder landing. But now, I mean, with job market staying as stable as it is, I see an opportunity for quote unquote soft landing.
Yeah.
Again, it's unless there's just data that just hasn't hit yet, and is it all hit at once? It's hard to say, but I think we could have a soft landing with quote unquote a recession, but just nothing like I thought we were going to have.
Yeah. The next thing I want to talk about is something I'm sure you get a lot of with the channel that's roughly twice the size of mine. And that is either direct feedback from Crash Bros or probably direct feedback from fans of Crash Bros. Because again, you can't be in real estate and grow on YouTube without talking doom, fear, crash. So what do you think it is about the Crash Bros that they just don't understand? They don't get right. What are they missing, you think?
I think it is this hopium type of mentality, right? It's the idea that I missed an opportunity. Well, it's twofold. For one, it pays, right? First and
Amen.
foremost,
It pays.
fear spreads. Fear spreads faster than anything else. And I realized that pretty early on into my YouTube journey is that, if you want to have more viral stuff, you make it more, fear
Edgy,
based,
yeah.
titles and thumbnails and that sort of thing, and it gets more clicks. I mean, it just does. Is it good? No, I think it's a crappy way for the system to work, but unfortunately that's what it is. So with that, I feel like there's a big portion of that, right? So one big channel did really well at the spreading fear, and now everybody's trying to copy that because they've seen the money that's being made off that.
Yeah. So
But
I
there's
don't know if
also,
I don't know if you have this, Jeff, but I paid for vidIQ. I don't know if you use it or not.
I used to, I don't anymore, but yeah.
Yeah, so I use it, and you can go inside other channels. The number one fear channel made about 80 grand a month spreading fear and nonsense.
Yes, it's crazy. It's
That's
crazy.
that's $1,000,000, 960. That's crazy.
It is crazy. It's absolutely crazy because it's based off zero data. That's what, and they sell data. So I'm wondering what they're selling. It's mind boggling to me how this whole thing works.
Yeah.
But I think it's that first and foremost, but also there's a large percentage of the population that want prices back at 2010 levels, 2015 levels, 2019, whatever the number is. They want rates back at these levels. They want things to be different than they are. They're not. Therefore, it's this crash. I mean, Josh and I always talk about, on the pod, everybody has their biases, right? Doesn't matter who you are. You have a bias, whatever it is. Their biases lead them to believe that the market's overpriced, that it has to crash in order to correct, that no one can afford it, that if I can't do it, no one else can. All of these things. And none of them have to be true. We've seen it year and year, year over year. And none of that has to be true in order for the markets to still do well, prosper, etc.
One of the things that always, I don't know, pisses me off, frustrates me. I'm not really sure what the right idea is. It's the recency bias. Everything has to be the '08 cycle. Everything.
Absolutely.
One of the things that I've done and I share for free is I've got data all the way back to 1970 across 30 or 40 different metrics, and I give it away for free. I call it my 53-year spreadsheet. And that spreadsheet single-handedly allowed me to call in 2021 that prices wouldn't crash. And then also, as the rates started going up, it allowed me to call the bottom. Why? Because you know what, folks? In the early 80s, rates doubled and transactions fell 50%.
Right.
Prices went up. And it just blows people's mind that if you get off your recency bias of 2008 and went back and looked at the early 80s, you could have learned something, right? We have been here before, and the outcome is in the data. It's mind-boggling that people didn't look at that.
No, and what I will say is that a large percentage of the population out there that are would-be home buyers that are that prime home buying age, they experienced the housing crash when they were younger, right? Yep. So it hit them harder, right? Their parents were losing their jobs, losing incomes, had to make changes, foreclosures. So there is that in their mindset that, hey, I've felt like this before. I'm scared. I don't want to feel this
Mm,
again. And so I think that's part of it too. I'm probably giving way too much credit to that, but I try to look at it all and go, hey, why are people feeling
yeah.
like this when there's no data to support, anything like what we saw then? And I think
Mm,
they had some sort of something that happened that they don't want to get near that again, and I get that. But at the end of the day, we supply and demand, and we've talked about it
yeah.
for 4 years on my channel, and until supply
Yeah.
gets to a number that exceeds the demand, in a meaningful way, you're not going to see a big change in prices. And I think that's my fear going into the next couple of years, is that a lot of these people that are selling their homes that have the 3 and 4% rates are also buying another home, right?
Exactly.
So they're
Yeah.
taking one, trading it for another, so you don't have this net gain in inventory. And
Correct.
in order to see this change, you need people that are selling or people building in a meaningful way where inventory can increase. And I just don't see it. And I think that's, for me, something that, am I biased? Like,
Yeah.
that's where I start thinking, am I biased in my beliefs and thinking that there's nothing else that can change it? I don't know, maybe.
Yeah.
But
Yeah.
until, I just, that's what I struggle with, because
Yeah.
it's,
There's one other thing that you just brought up that you and I experienced and is very different today. And we'd have to go back to 04, 05, 06. So pre-crash. I'm sure Southern California was the same. Certainly where my market is, the Central Valley, there were builders everywhere. And when I look at where we are exiting 2023, it's like 20% of where we were kind of at the peak in '05. And they're just not building. And oh, by the way, builders are more profitable today than they've ever been,
yeah.
right? Their gross margins and all of this. So yeah, what do you think about, new construction? I don't
It's
know.
hard for me to really talk about new construction in a meaningful way, just because we don't have a lot of it here
Yeah,
locally.
that's true.
It's like, we're not in Central Texas, and I heard a stat recently that the county of wherever Dallas is, I don't know if it's Dallas County or some other county,
Plano
but
or something. Yeah.
whatever the county is, built more homes in that county last year than the entire state of California.
Oh, wow.
Yeah.
I had
So
no
it's
idea.
like,
Okay.
so when you talk about like number of homes, okay, Texas, yeah, like people
Makes
there,
sense.
it makes sense, right?
Yeah.
Southern California, I mean, or California in general, it's like $100,000 just to break ground
Dude,
because
to
of
get the permit.
regulatory. It's just
Yeah.
crazy. And
Yeah.
so, anything locally where I am is all infill stuff at this point.
Yeah.
They tear down a school, and they build, 50, 80 homes or whatever. But what's crazy is that the price point of these homes that they're building in my market start at 2 million bucks. Like,
Yeah.
who
They're
can
double the
afford,
median.
like,
Yeah.
yeah, like, it doesn't help the people that truly, that really need the new construction to be helped. And I think, also looking at that, I go, okay, that's great that you're building $2 million homes, but you're not. And I get it from the builder side, because they're trying
Yeah, of
to,
course. Yeah.
they just
Gotta make
paid
money.
X amount
Yeah.
from this this land. They've got to build these in order to profit. So
Mhm.
that's the struggle too.
Yeah. Well, the other thing we both have in California, obviously, is Prop 13, which is allowing a lot of folks like my mom to stay in her home because she couldn't afford it today. Um, do you see the silver tsunami kind of picking
No,
up where, yeah,
not really. I talked about this in a meaningful way in an hour podcast, on our Educated Homebuyer podcast, and it's the demographics. I forget the number of years now, but it's the silver tsunami at this point. I think it's like starting. It started a couple of years ago, but it goes for like the next 15 years or something.
right.
With I think the peak, if I remember correctly, again, I'm guessing it was like 28 or 29, somewhere
Okay.
in those numbers where you're going to see the peak number. I see too many opportunities out there for one, this is spread across the United States. It's not concentrated to one market.
Right.
So that's important to note. Not all of these people are going to come to the market at the same time. So it's going to be
Correct.
over a period of years. So, and there's a lot of the people that are going to inherit these properties aren't homeowners, so they're going to keep it. Some are going to decide to turn it into a rental. Some will move into it. Some will decide to sell it. So there's so many different things that it's hard to say what actually happens with that. I mean, I think it's going to add some inventory for sure. Is it going to be enough to change the dynamic of the housing market. I haven't seen anything that says that yet. But that could be something that affects it. But I forget when once you total that number, I forget what percentage it actually makes up of the
Yeah.
population, because I don't have the numbers, but it wasn't one of those things that's like,
It's not
okay,
meaningful. Yeah.
it wasn't a huge thing that was like, okay, the market's going to crash if all of it. No,
Yeah.
it's going to add some more inventory, but something people need to understand is a lot of these properties are going to be dated. They're going to
Yeah.
be original condition. They're going to need a lot of work. So yeah, it's going to be a new property, but you got to have cash and money to be able to rehab it and do different things on it. So it might be an opportunity for investors, for flippers, if and when those opportunities present themselves.
Yeah. So as we wrap this up, Jeb, really what I guess we're looking at over the next 5 or 6 years is the question I keep trying to ask myself is, where does supply come from?
Mhm.
And I don't have a great answer. I
No.
just don't have a great answer.
I wish I did.
Yeah,
I
me
mean,
too.
I think everybody looks at us and says these guys are in the real estate business. They want prices to go higher. And that's not true, at least for me. I would much rather prices be 15-20% less and do 2 to 3 times the amount of
Exactly.
volume. I'll make a lot more money.
Yeah.
If we're being honest, I get to help a lot more families.
Yeah.
So
Exactly.
prices continuing to go up and reach new highs and peak, it's not good. You need stabilization in the market. You need sideways movement to some extent. You need some years where prices do go down a little bit
Mhm.
in order for things to be sustainable long term. And so
Yeah.
just, understand that it's us as real estate agents are also hoping for similar things, unless you're
Yeah.
just hoping for a crash, and then I can't help you.
I can't help you with that. Yeah, if you just want to talk nonsense. It's funny. I get the comments all the time like you want the market to go up. I'm like, you not listen to my show? I like to buy
No,
and
they
hold.
don't.
So
That's
I
the best part.
would love lower prices. Are you kidding me? Plus I've invested through a crash. I know half of you nitwits would never buy because you're scared. They're always going to go lower. So yeah,
Absolutely.
it's
That's
hilarious.
exactly how it works.
Well, again, Jeb Smith, we are about 5,000 away from 100 grand. What is that channel? And then what are the other channels you're on that people can follow you on?
Yeah, so Jeb Smith, just my name. JEB Smith is the main channel. Talk housing, real estate, kind of some basic economics, and guide people through mortgage lending and that sort of thing. Kind of all encompassing everything to do with real estate. It's there for education. That's really what it's about. And then also have a separate channel that's also a podcast out there that you can find on Spotify and Apple. It's called The Educated Home Buyer. And actually, Michael, you've been on that, and
Mhm.
talking about one rental at a time and investing, and that's really just a deep dive into a specific topic on in real estate and or mortgage to help you just become like super educated on all facets of real estate. So either of those places you can find me. Any support is appreciated, and as always, I appreciate you having me on here as well.
Oh, absolutely. I love what you're doing. Keep it up. I look forward to the silver play button coming your way sometime in January. A quick
I
30 to
love it.
45 days
I
away.
like the
Thanks, Jeb.
optimistic. Yeah, for sure. Appreciate it.
Take care.